The US dollar is the risk. The safe haven is gold. The safe haven is silver. Don't lose the race to get out of the dollar. Get out ahead of most people, because most people are like a deer in the headlight.
Why gold and silver continue to go parabolic. By the time this video goes up, we could be in triple digits in silver. We're already in triple digits in silver in Shanghai, where silver is trading at over $100 an ounce. Can Europe sell $8 to $10 trillion in US Treasuries in retaliation for Trump's bellicosity and trying to take over Greenland from the Nookers, or whatever they're called? The amount of gold that is on the central banks of Europe, including the European Central Bank itself, makes no difference as to the value of the euro. And no matter how much gold central banks stack, it does not help their currencies.
The traditional financial safety net has inverted. The US dollar is now the primary risk asset, while gold and silver have reclaimed their status as the only true safe havens. With silver already breaching $100 per ounce in Shanghai, the physical market has effectively decoupled from Western pricing, signaling that those who fail to get out of the dollar now are effectively deer in the headlights, facing an inevitable currency collapse. Peter Schiff, chief economist at Euro-Pacific Capital, and Rafi Farber, publisher of The Endgame Investor, analyze this unfolding sovereign debt crisis. They warn that while geopolitical tensions could drive Europe to liquidate $8 to $10 trillion in US Treasuries, this is a trap for the unprepared. They clarify that central bank gold accumulation alone cannot save a fiat currency. At the same time, the European Central Bank holds massive reserves, but it makes no difference to the euro's value if the currency itself remains unbacked. This implies that while the banks may survive, the purchasing power of the public holding paper currency will not. Now we present the clips from Peter Schiff and Rafi Farber's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
Don't lose the race to get out of the dollar. Get out now. Get out ahead of most people, because most people are like a deer in the headlight. But you got to sell U.S. stocks. You got to sell U.S. bonds. You got to sell U.S. dollars. You got to be into foreign stock. You got to be into value. You got to be into dividends. You got to be into resources. You got to be into the emerging markets. You pretty much have to own the portfolios that I have been creating for people for years, because I knew this was coming. I knew it was coming a long time ago. And again, we ended up delaying the day of reckoning. We kicked the can down the road, but I knew that eventually our luck would run out. Our ability to do that would run out. And Donald Trump just accelerated the process. That should have happened, right? Anyway, now it's begun, finally. So the returns are going to be phenomenal. Right, the returns on gold stocks already beat the S&P for the past 10 years. I mean, gold obviously kills it, gold and silver. But foreign stocks way outperformed the U.S. market last year. They're already way outperforming it this year. And the year just began. So you got to get into these portfolios. What is about to happen is exactly what I've designed my strategy to protect you from and to enable you to profit. Most people are going to get wiped out. Right? We don't have to share in that fate. Unfortunately, I wish there was something I could do to help avert it, but I can't, right? I try to go on Fox News and tell the truth, and the president gets me kicked off, right? You're not allowed to criticize Trump on Fox News, right? So much for freedom of the press. But look, there's nothing I can do about this disaster, right? But I can save as many people as I can, right? We don't all have to go broke just because the country is going to go broke, right? A few Americans could manage to survive it financially, and they will if they follow my plan. I've got this economic survival plan that will not only protect your wealth, but allow you to increase your wealth as the dollar collapses and other assets rise in value. What's lost in America will be gained outside America, but you don't have to live outside America. You can own the assets that are gaining the value that U.S. assets are losing, right? That's what we're doing. So make sure and go to the Europac website, europac.com. Look at my 5 mutual funds. You can buy them all, no load, any discount broker. But better yet, just call up the phone number, schedule an appointment, talk to the representatives, and transfer your retirement account over, your IRA over. Let us help you manage that. Let us help you build and manage your portfolio so that you can survive and thrive during very, very trying economic times that are going to be following the United States. And the timeline, I think, now is short, right? I mean, everything is kind of happening, and I think the pace is going to quicken. Remember the old saying, how did you go broke? Well, slowly at first, then all at once. Well, I think we've gone through the slowly part. We're now at the all at once part. So you have to act quickly. You got to buy your physical gold and silver. If you don't already have gold and silver, shame on you, but buy it now. I know I've been saying it, but you could also buy more, right? You never have enough, right? So go to Schiff Gold. And again, everybody who follows me should open up a T-Gold account, because we're going to need T-Gold one day. We're going to need an alternative monetary system, because the dollar is going to collapse. People aren't going to want to deal in dollars. They're going to want to deal in alternative. And the best money is gold. And what makes gold even better is the internet. Tokenization is the ability to transact in gold without actually having to physically carry it around. That way you can transact in very small increments. Because remember, gold is going to be very expensive, right? Now it's almost 5,000 an ounce, 47.60. It'll be 10,000 an ounce. It'll be 20,000 an ounce, which means if gold's at $20,000, even a 10th ounce gold coin is $2,000, right? That's a lot of purchasing power in a 10th ounce coin, right? So the best way to spend it will be if you can have a token and have a third party that you trust store your gold so that you can transact in your gold without actually having to hold it. Now, you don't want to have all your gold with a third party, but the gold that you want to use in commerce as a medium of exchange, yes, makes it so much simpler, right? And so go and set up a T-Gold account.
And why gold and silver continue to go parabolic. By the time this video goes up, we could be in triple digits in silver. We're already in triple digits in silver in Shanghai, where silver is trading at over $100 an ounce. Can Europe sell $8 to $10 trillion in U.S. Treasuries in retaliation for Trump's bellicosity and trying to take over Greenland from the Nookers or whatever they're called? The short answer is no, first of all, because Europe doesn't own them. They're owned by private entities in Europe, and the European government, whatever that even is, can't force sales of those assets. But, maybe they can these days, or they can lock people in their houses and they can force them to inject RNA and all the other crap. So why can't they force them to sell treasuries? Maybe they could. But even if they could, the problem logically is that the euro is a dollar derivative, and treasuries are their main asset in dollar terms. So if they sell U.S. treasuries, that means the euro falls and the purchasing power of the euro gets destroyed. And I will preemptively or not preemptively post that. I'll explain in the rest of the video why the amount of gold that is on the central banks of Europe, including the European Central Bank itself, makes no difference as to the value of the euro. And no matter how much gold central banks stack, it does not help their currency. Graphic proof of this. I've made this point before, but it's more important to make it now since Peterschiff, who I am a big fan of, Kvoto Bimkomo Munach, came out and said in one of these obscure shows that one thing that the Europeans could do is sell treasuries and buy gold, which would help them and hurt U.S. treasuries. But no, I don't think it would help them, because the only way that stacking gold for a central bank can affect the value of a currency on any permanent basis is if it becomes convertible. Meaning if the central bank makes a deal that whatever the gold that they have is now exchangeable for the amount of euros that are available outside of the central bank. If that ever happens, then yes, it would save the purchasing power of the currency, but it would also destroy every bank that is dependent on that central bank. So no, it will not be done.
The traditional financial playbook has been upended. The US dollar is no longer a safety net, but a primary risk asset. Investors remaining in cash or domestic bonds are akin to deer in the headlights, frozen in place before an inevitable currency devaluation. The urgent strategy now demands a race to the exit, reallocating capital into foreign equities, value stocks, and tangible resources before the window closes. This divergence is already starkly visible in the precious metals market, where a massive arbitrage has emerged. Silver prices in Shanghai have already breached triple digits, signaling a complete decoupling of physical reality from suppressed Western paper markets. Geopolitical retaliation offers no escape from this monetary trap. While speculation suggests Europe could dump trillions in U.S. treasuries to pivot into gold, such a move is structurally impossible without economic suicide. Because the euro effectively functions as a derivative of the dollar, liquidating U.S. debt would collapse the euro's own purchasing power. Furthermore, the the accumulation of gold by central banks is meaningless for currency stabilization unless that currency is made convertible. Without the ability to redeem metal paper, gold reserves are merely inert assets that fail to protect the currency from hyperinflation, leaving the banking system exposed to the ultimate day of reckoning. Let's get back to the interview.
Sometimes people are flabbergasted when I say that it doesn't matter how much gold a central bank has, that it has no impact or very little impact. It has ephemeral impact, maybe for a few days or weeks. Tiny impact on the purchasing power of the currency that is issued by that central bank, but it doesn't last, and it can't last because these central banks are not willing to destroy their banking system as they have it. They only use gold to sell into the market in exchange for their currency and then retire it. So the most that gold can do is decrease the circulating amount of currency out there, but over time, it cannot increase its purchasing power. Let's start this with what Peter Schiff said on that obscure financial show. I don't even know what it is, but I found it on YouTube. Here's the excerpt.
As far as if Europe wants to do something that would be harmful to the U.S., but would also be helpful to Europe, European central banks can sell U.S. dollars, they can sell U.S. Treasuries, and they can buy more gold. Yeah. I think that would hit the U.S. where it hurts, and it would actually help Europe because gold prices are going to keep going up, and the more gold European central banks can have, the better.
Peter is right theoretically. If they bought gold and then made the euro convertible into that gold, then it would help Europe and hurt the United States and the dollar, but at the expense of the European banking system. If they're willing to have a banking crisis and the end of the banking system as we know it, then yes, it would help Europe long term to acquire gold and sell U.S. Treasuries. But no, they're not willing to do this. We know that they are cowards and they have no idea what they're talking about, and they are not very impressive people, nor do they have any spines. So we're not even talking about them saving the euro. Not going to happen. Here is some graphic proof that no matter how much gold a central bank stacks, it does not affect the value of its currency.
The big difference between the 2026 financial crisis, which is actually going to coincide with the 250th year anniversary of our country, right? But the 2026 financial crisis will be very different than the 2008 financial crisis. Not just because it's going to be a lot worse, but because it's not going to be a global financial crisis. It's going to be an American financial crisis. The rest of the world is actually going to benefit because the burden of supporting the U.S. consumer-based economy will be lifted from their back. So our loss is the rest of the world's gain. That's what the world's going to find out. See, they've been reluctant to do this because they didn't want to upset the apple cart. Well, wait till they find out, right, how much more beneficial it is for them, right? People, the rest of the world doesn't understand the heavy burden that has been placed upon it by the United States. In exchange for our military protection, we have exacted a heavy toll. Yes, the world hasn't spent money on their military. They spent it on ours, right? They've loaned it to us. They've provided us with the goods that we don't produce so that we can produce weapons instead, right? So this whole arrangement is going to come to an end, and this is a U.S. economic crisis, a U.S. financial crisis that won't reverberate around the world. Yes, the world is going to take a loss on their treasuries, but their currencies are going to go up. You see, when we had the 2008 financial crisis, the dollar went way up. When the crisis started in the summer of 2008, the dollar index was at an all-time record low. It was around 70. Now it's just below 100. So the dollar is at a high point about to collapse. And as the dollar falls, that is going to be a big benefit for the rest of the world. And as money, after the 2008 financial crisis, money came fleeing to America, right? Everybody, came to America for safety. Now, everyone's going to be pulling their money out of America for safety because America is the epicenter of the problem. America is the danger spot. Treasuries are not a risk-free asset. They are the risk. The U.S. dollar is the risk. So the safe haven is gold. The safe haven is silver. The safe haven is not Bitcoin. And that should be painfully obvious. All these Bitcoiners are now they're just waiting, right? They're all waiting for Bitcoin to follow gold and silver. They think it's only a matter of time. The fact that it hasn't moved means it's not going to move. Bitcoin had its time to shine and it passed, right? It had a test and it failed. It is over for Bitcoin. I mean, is it possible that it could have another run? I say it's unlikely, highly unlikely, because it already would have. And the markets don't make it that easy, right? You have plenty of time to load up on Bitcoin if it's going to make a big move up. I think the markets don't give you that much time to do something that looks that obvious. The reason you have so much time to buy Bitcoin is because it's the wrong thing to do. All the people that have moved into Bitcoin because they expect it to follow gold and silver are going to be in for a world of hurt as the market implodes. But this crisis, this 2008 U.S. financial crisis, dollar sovereign debt crisis, and maybe we can hold off until 2027. I don't know. But this is January, right? It's already started. You know, gold is already up 10% on the year. We're not even finished with January. Silver is up 30%. 30%. Gold and silver are off to a stronger start this year than last year. And gold mining stocks are off to a much stronger start into 2026 than they were in 2025. So we've got a long way to go this year. We got the midterms. But again, the worst thing politically is the Republican Party owns this crisis. Whether they deserve to own the whole thing or not, and they don't because the Democrats share a lot of the blame, it's all going to go laid at the feet of the Republicans. And the Democrats are probably going to sweep the House and the Senate in the midterms. It could be the biggest loss for an incumbent party in history. And then we're probably going to get a fledged Democratic socialist for president. Now, right now we have a Republican socialist, and the problem is the Republican socialist claims that he believes in capitalism, which he doesn't. But the Democratic socialist will be able to use the problems that were created in part by the Republican socialists and say that capitalism doesn't work. And this is why we need socialism to solve the problem, even though socialism will be the source of the problem, and the Democrats will take it to an even higher level. And so they're going to rub salt in an already very deep wound.
The theory that European central banks could weaponize gold reserves to destabilize the US dollar is structurally flawed without the restoration of convertibility. Merely stockpiling bullion provides no lasting support to a fiat currency like the euro, unless that currency is legally redeemable for metal, a step central planners refuse to take. Restoring a gold standard would necessitate a massive credit contraction, likely collapsing the fractional reserve banking system they seek to protect. These institutions remain trapped in a coward's equilibrium, stacking gold to hedge their own balance sheets, while their currencies remain effectively tethered to the failing dollar system. This monetary paralysis is setting the stage for a unique financial disaster in 2026. An isolated American crisis. Unlike 2008, when the world flocked to the dollar, capital is now fleeing the US. The early year performance divergence starkly illustrates this. While silver has exploded 30% and gold 10%, Bitcoin has stagnated, failing to capture the haven bid. This economic isolation is expected to trigger a severe political backlash. With the current administration likely to shoulder the blame for the collapse, analysts project a landslide victory for Democratic Socialists in the midterms. Such a shift threatens to misdiagnose the sovereign debt crisis as a failure of free markets, ushering in policies that will likely rub salt in the wound and accelerate the destruction of domestic wealth. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.